Bitcoin's reclaimed $110,000, but for the last 3 months, it's essentially gone nowhere. And in that time, we've begun to see a rotation from one asset class to another asset class. And this is something pretty typical towards the end of the cycle, towards the peak of the 18-year cycle before we get the downturn. And I suspect that downturn is coming because of the signs that we're seeing with market participants, investors, and traders transferring or rotating from one asset class to another asset class. And this rotation is essentially a symptom of what's to come next. So hit the like button, subscribe to the channel if you want to learn more about navigating the cycles. And this covers Bitcoin, the stock markets, commodities, real estate cycle, and everything in between. Essentially, we're doing long-term investing here on the channel. We're not here for the short-term thrills. We're here for the long-term, watching our portfolios grow over time. So if that interests you, you found the channel for yourself. This is it, the home of Macrocycle analysis. Today, I'm looking at a couple of videos that I'd covered almost 3 months back, looking at a multi-year bull market kicking off. And since that time, the price is up about 13%. Now, I'm going to start with Bitcoin because of course that's what everyone is here for, and how I see this positioned over the coming month and quarter before we get into the rotation into the multi-year bull market. Now, as I said, we're watching the price here. The short term isn't looking too bad. We did see the signal of the 3 red weeks down completed yesterday, which essentially means that we'll probably see some sort of rally and then another test of these lows. And the lows are currently sitting at $107,000 for Bitcoin. Now that particular signal, 3 red weeks, we've seen it many times before. There's a bit of a rally and then the market comes back to test that low and sometimes breaks through in a pretty big way. We go back to the previous moves, 3 red weeks, rally, tested the lows, and on those rallies, the low to the high, you can do anything like 10, 12, 13%. This one here ran up about 9%. That was after the 3 red weeks, tested the low, another rally, another test of the lows again, and we can take it all the way back. Essentially, we saw the three red weeks, and what we're expecting to happen is some sort of rally. Where does that rally go to? The numbers are, at the moment, 112,000. If this is a temporary low here at 107, we bring out our 50% tool. Could be a run up to around 116. That would probably be a reasonable area to look at before we see some sort of test again. And the time frame would be somewhere in September. So we're looking at this now. We've got the breakdown yesterday. So September is lower and there's been a move higher. So something like a move up into the 50% or even the $112,000 level, and then a move back down to test those lows. Plenty of support to the downside for the bull market, around 100 to 102. And the next price target for the short term to the downside is around the 102, which is this double top price projection. We've hit all of the targets on the way down. 50%, the 100% here at 113, and then the 150% of this range at 107. So it's a really nice, simple way to watch how the market unfolds, especially if you've got a trading plan to get short on a double top and then take profits on the way down with each of the price targets that the tool and the analysis, the GAN analysis, gives us on the way down. So the daily and the weekly covered here. I think that's pretty clear. It looks like we've got that coming up. And the cycle suggests that as well. We've been tracking pretty similarly to our 5 and 10-year composite cycle. September, a bit of a grinding month here. And in the earlier part of the month, you can see this little rally into a high before another move down. Doesn't necessarily have to be a severe move down. Of course it can be, but I'm just watching this as a market pattern for September, as the majority of the year has basically followed suit here. Moved down into late quarter 1, early quarter 2, a rally out, consolidation. You can see here in the red, that's the composite of 5 and 10 years, basically what Bitcoin did 5 and 10 years ago combined. And then the blue line is what Bitcoin did this cycle. So it consolidated, ran up, new fresh high, and in this case it was an all-time high. Back in 2015 and 2020, it wasn't a new all-time high, it was a fresh high for the time. And then it started to correct into this September. And of course, the move higher comes after that point. So there's consolidation in September. A lot of people are expecting a red September, but that could be red in the stock markets, potentially green for Bitcoin, but it doesn't mean that the markets are actually going to go into a major boom. I think that period comes after we get through this period of September. Now, September is full of economic news, economic announcements coming out of the US, especially with the interest rates and the PPI, CPIs coming up. We've got the economic announcement report coming to you today. Link is in the top of the video description. You'll also get the Bitcoin and altcoin reports that are coming out this week. So if you want those, link is in the top of the video description. Subscribe over there. Monthly forward returns looking pretty all right here for BTC. The push through to the end of the year is essentially what each of the years have suggested, barring the bear market years. We've gone through that in great detail in previous videos, which I'll leave a link to at the end of this video. And the 18-year cycle coming to a peak possibly over the next 12 or so months. This is for the US home prices and economic cycle. The stock market potentially goes a little higher. That could drag Bitcoin along with it as well. But in the case of commodities, this was one of my 13 forecasts for 2025 that I put out in, well, the 2nd of January here. So right at the beginning of the year. Number 8, commodities, in particular energies, will close higher. Oil, gold, silver, copper, natural gas. Now, those have actually been slightly down in the energies, but the precious metals, as I should have written here, but I've got them listed, gold, silver, copper is obviously not the precious metal like gold and silver, but it's used a lot in the economy. Those two close higher for 2025. Gold has just hit a new all-time high price, closing in on $3,600 for the first time ever. This move up has basically been a lot stronger than what Bitcoin has done since its March 2024 top. So you can see the breakout. This is the breakout month here for gold. And this will all make sense in a moment as I put these together with gold and the other precious metals and where Bitcoin currently sits in the cycle along with the 18-year cycle. So here is March 2024. That was the $74,000 top for Bitcoin. This was the month for gold that it broke into a new all-time high and cleared the 3.5-year consolidation at relatively high prices. The old all-time high was $1,900, and then it broke to a new all-time high in July 2020, so coming out of COVID, new all-time highs, and then consolidated for 43 months before breaking out here in March. So we're going to take a measure from the opening there in March to the current price or even high here, looking at around 75%. 75% for gold in that period. Now, a look at Bitcoin from that high. So there's March 2024. Let's take it from the open. It's actually going to be somewhere around the $59,000 level. We're at about 86% there. So call it 90% as a round number. Gold has basically done a pretty similar move here to Bitcoin. Does that mean that it's all over for Bitcoin? Of course not. There's obviously, well, there could potentially still be some more gains here, but we're beginning to see a rotation even from gold into other assets like silver. And the big bull market, multi-year bull market that I discussed about 3 months ago, and silver was sitting, well, just breaking out at $35. It got to 36, and on that day it was pushing to 37. So it was getting the breakout here at 35. From that period, it's now up to nearly $42 an ounce. 41.77 as I record this, and the day's high, 41.995. So as close as you can get before ticking over to 42, because it's measured in 0.005. That's one tick on silver. So very close to $42 an ounce there for silver, which is a 14-year high. We'll throw on a few of my lines here. Highest monthly close in over 14 years. Starting to break out yet again after attempting the breakout, consolidating in June. Another breakout, consolidated in July and August, and then started to run at the end of August. This is on a weekly chart pushing to new fresh highs. So some of the price targets can get pretty wild, and I suspect if it does break all-time highs, which is through $50 an ounce, we're going to start hearing about how silver is going to hit 100 an ounce, 200 an ounce, 500 an ounce, because it is so undervalued to gold. These are the sort of narratives that will begin to pop up. And the same narratives which have been going on for decades, reminding ourselves here, is that silver is a manipulated market and gold is a manipulated market. Every single market in the world is manipulated in one way or another. And we just have to put that aside and just follow the charts. If the trend is still up, there's a strong trend, just keep running with the trend, but try not to get too carried away with any of these crazy price targets. And I say this early on, while things are still relatively calm out there in terms of price targets for silver, but eventually it will most likely get to that point, as all of these cycles do as they reach their peaks. Now, the really interesting part here with silver compared to Bitcoin and cryptocurrencies is that precious metals like silver have run on past the peak of the 18-year cycle. So when you've got real estate peaking, the economy peaking, stock markets peaking, stocks, of course, being in that, have been peaking. Silver in the last cycle continued to run into 2011, and gold also ran into a high of 2011. But it's not an easy ride into those tops. Here is a March top. So March 2008, when the stock market was coming down, the stock market topped in October of 2007. Gold started heading up, stock market started heading down in a pretty significant way. But in between that, gold had a huge correction when the stock market also had a pretty significant correction. So it corrected there by about 34%. And if we throw on the S&P 500 over the top of it, you can start to see through those periods how tough it can be to trade these markets, even if they are in a multi-year bull market. Like a 34% swing against your position of, in this case, gold or silver in that same time, which was 61%. March 2008 to October 2008, 61% swing against you before it then ran on for another 500%. That's like an altcoin running up through the midst of a global financial crisis. This isn't for the faint-hearted, and although I think there's a multi-year bull market coming, I think it's going to be a pretty tough ride when things eventually turn down for the S&P 500 and for the NASDAQ and so on, which we're following here with the 18-year cycle coming into this peak. So more on those stock markets in just a moment, but I want to finish up here with silver, looking at the historical data and some of the upside here, and of course, what could go on. Historical charts, we see pretty severe runs up. New fresh prices is a historical chart going back to the 1920s. All-time high, roughly around $50, and of course we're now at $42. When you adjust for inflation, it didn't reach a new all-time high in 2011 compared to its all-time high price in 1980. So we're 45 years on from that. Doesn't mean this time can't reach a new fresh high. Maybe we take out the 2011 high as well, so there's a bit of room to run here. And the annual change, once it starts going, can produce some significant returns for multiple years. We take a look at 2001, that was the 1% of the year loss. So for that year, down 1%, then up 3%, 28%, 14%, 30%, 46%, 14%. There it is, down for 2008, and then two massive years to get you into that peak of 2011. So 2009, 2010, big years. And of course, 2011, huge spike up, topped in April, and then came down for the year. So really, really big reversals there. It's like an altcoin. There can be big gains had for many, many years, unlike altcoins, which might only give you gains for a few months. But the corrections are going to be quite severe. So you got to have your wits about you and not be a little bitch about these things, because they can get wild. So I think I've covered that quite well here with how wild things can get even if they do go up. And that correction was March to October as an example. March to October is about 7 months. Pretty wild stuff. Okay, annual average prices as well. The last lesson here for holding on, or in this case, not holding on, is that they can run up pretty well for many, many years on end. But then if you get blindsided towards the peaks, you can be stuck in a position that is failing you for decades. Not days, not months, not years, well, obviously years, but decades, multiple 10 years. The peak there, 1980, ran down. You didn't basically break even until 2010, 30 years later. And then when you adjust for inflation, you're still down. So you're still down 45 years later. Here we are, 2011 at the peak, and then only now we're starting to get back to those prices 14 years later. So if you didn't get out through those couple of years after holding through that period, well, you're still basically down, as you can see from this adjusted for inflation chart. So basically a huge warning, even though there is the possibility of a nice multi-year bull markets. Basically, don't get blindsided by these things if they start to run, and all of the ridiculous narratives that get tacked onto things like gold and silver, that the world is ending and the dollar is collapsing and all sorts. And we will see it. We will see things like the dollar collapsing, as we have been covering now for years on the channel, because of the 18-year cycle that's helped us out get to this point. Second half of the real estate cycle, that's this, essentially suggests that the US dollar goes down for the second half of the real estate cycle. So that has happened, and it's another reason why the 18-year cycle, or why we can see how the 18-year cycle continues to work. Short term, I said here, maybe September, October, we see a bit of a rally, maybe a slight weakness in other assets. Of course, Bitcoin's down a little bit here. But in terms of the rally, unless this closes above 103, any of these rallies will likely get met with resistance and then eventually continuing to come back down. So that's a long-term view here for the US dollar. And as it continues to fall, I think we'll likely hear about how the US dollar is collapsing, and you've got to rush out of the US dollar and get into other things like gold, silver, maybe Bitcoin, maybe, I don't know, the Chinese yuan or something like that. There's going to be some sort of narrative that is attached to this to get people to think and do things on the way. Now, September in the short term obviously continues to show up as being red in the historical data when it comes to the S&P 500 in September. Since 1927 of year one of the US presidential cycle, which is what we're in, the S&P 500 declined 58% of the time on average by 1.6%. So this is the S&P 500. Statistical data suggests that there is a high chance that the S&P 500 will be red in September. The cycles, especially the red line I've got here for the 5-year cycle, also suggests it could be red. Doesn't mean it's got to be anything overly severe, especially after this big move up, all-time highs. And the consolidation looks relatively the same as to the last cycle that we're watching, where the gains continue to get consolidated as the price slowly climbs higher. So you had big moves higher in June, and then slow moves higher as the gains seem to be getting consolidated. Potentially a longer period here for September, as the historical data suggests red, and everyone's obviously talking about September being rectember and red September and all that sort of stuff before you get to the October and those sort of things. But the S&P isn't looking as bad as the NASDAQ at this stage, and the NASDAQ hasn't put a new high, whereas the S&P has been putting in new highs. So it's something to also watch at this point, where the NASDAQ has been stronger overall, but now it's looking slightly weaker. Potentially also why Bitcoin is looking that slight bit weaker at this time. S&P higher, NASDAQ lower high, Bitcoin lower high as well. So let's keep that one in mind moving towards the next phases. And speaking of next phases, Michael's put out a fantastic video updating the Elliott wave cycle, looking at the total cryptocurrency market cap. The suggestion is still looking towards wave 3, which is this white line in the background. So still very, very bullish news or bullish analysis. But in the short term, it might need a little more time to consolidate the gains, as I talked about at the beginning of the video. So up into this wave 3, pull back into wave 4, big ending as well into some sort of wave 5 peak. And that would be wave 5 of 5. Basically the end before a multi-year bear market. That's looking at Bitcoin and cryptos. In the meantime, silver and gold, potential multi-year bull market, while crypto, after this point, we get to this peak, multi-year bear market. Hope I said those right throughout the video. Okay, so looking relatively good into these tops, pullbacks. Now, the point I wanted to make on this particular top here, this is the wave 3 in the wave 5, so the significant move here, is that this timing could come out around the October period that we're watching and discussing from the previous video, which would then suggest to people the cycle's over, because you could see a severe pullback. The thing that you'll know, or hopefully you'll remember, is if that happens, if we get this move up in the next 6 or so weeks into a local top, a new all-time high, but potentially a local top, and then we see the pullback into wave 4, the rules state for Elliott wave that the wave 4 low or any part of wave 4 cannot be within wave 1. So that price range of wave 1 comes in around $3.5 trillion for the total cryptocurrency market cap. So depending on where this top is, the pullback that happens from there for wave 4, that wave 4 cannot go into wave 1. If you see it go into wave 1, then it's likely that would be the top. So if it doesn't happen, then there's likely another move higher that could be closer to the peak of 3. It could go beyond 3, but essentially you do have that next move up. So you've got that opportunity there to start to sell out into those final moves higher. If this interests you and you want to learn more about it, TIA Premium is the place to learn about it so that you can implement it into your trading and your investing portfolios. The link to that is in the video description. This is really, really helpful. It's something that we've been sharing, and Michael in particular has been sharing since the bear market low. So we're doing this in real time, not in hindsight. And that's the idea of trading. You've got to be able to attempt to do it and then trade off it in real time to obviously make the real gains and not the paper profits. So if that is still the case and we're heading up, well, we'd potentially see, or we should be seeing, the US dollar, USDT dominance start to go down over this period. So we see any sort of rallies here, it needs to get rejected around the 4.8 to 5% level that we've been discussing, and then start to head down. That would then line up with crypto and Bitcoin prices heading higher. So far, so good. We haven't seen any sort of overbalance to the upside. And Ethereum also holds up relatively well. So that's going to also help with some of the majors like ETH and Solana. In the case of Ethereum though, after it's put in some significant runs, it can produce 20 to 30% corrections. And in the case of the previous moves where it's done 133 days to the upside, it did a 24% correction. The prior time it did 152 days up, it corrected down about 31%. And some of these smaller runs, some of the smaller corrections, this is from the January ETF hype back in 2024, that's a 20% correction. 150 days up, it did a 28% correction. And currently, from the top, it's only done about a 15% correction. So reviewing anywhere down to 20% would take you down to 3,900. So really still not that bad. It's still in a bullish structure. It's just consolidating those gains and probably wiping out some of the people who bought late, like the ETFs. Here is the ETF data for Ethereum. And you can see in these last couple of weeks, very, very big inflows through August. And essentially the price hasn't gone anywhere yet again. So following the ETF flows is a pretty, well, I think, a pretty fantastic signal to trade against. If you're seeing the public buying their ETFs in huge quantities, record-breaking numbers as it was through the middle of August, through the prices here of $4,100 to $4,700. Obviously now Ethereum hasn't gone anywhere. It's sitting at 43, right smack bang in the middle of that. Then these are good signs that the public is probably going to get it wrong eventually at these peaks, and there's probably going to be some sort of correction. However, just got to be patient. It's usually not the next day thing where you get this billion ETF inflows, still a few more days, and then the consolidation begins here. So that's what we're currently seeing at the moment. Now, if there is the pullback, we've looked at 20%, somewhere around down to 3,900, and a decline of 30% would take it down to about $3,300 per ETH. Any further than that, still down to 31, 32 would bring you out to the 50% level. So there's a lot of room for ETH to move here, even if there's some severe drops over this period, where we may see Bitcoin on the rally and then the correction. And on that correction, we might start to see some of the altcoins also get wiped out. In the meantime, you'd probably see Bitcoin dominance on the rise. And that would be probably one of the final times here that Bitcoin would rise. We're looking somewhere towards 60 at a very crazy marks, maybe somewhere around 62% for this rise for BTC dominance. And then the subsequent fall for the dominance, while maybe ETH and Solana and some of the other larger caps also go up. And speaking of Solana USD is still sitting in a relatively strong position. It's above the 50% at 195, but it's yet to crack the $210 level. That level was the March 2024 top. It had some support, and then it broke down, and then it was resistance, and then resistance, and then resistance, and currently short-term resistance as well. So overall, relatively okay position considering where the market is at. But in the case of the total crypto market cap, doesn't look like things are ready to get pumping just yet. Even if they do press to new fresh highs, it doesn't look like the position is ready just yet for BTC. So stay patient, keep watching the charts. We'll keep watching the stock markets, the US dollar, the yields, the interest rate announcements that are coming up, and of course, watching the multi-year bull market here that looks to be happening here now for silver, up since 2020, 5 years, nice breakout of $35, and gold also hitting new fresh all-time highs today at nearly $3,600 an ounce. Oh, that's another interesting one to look at. Bitcoin versus gold. Before I go, BTC versus gold since that March top for Bitcoin. Don't tell Peter Schiff, but Bitcoin is actually down since that March top against gold. So here is the March tops, 13th, 14th, the current price. This is Bitcoin versus gold, and Bitcoin is down 8%. So back in March of 2024, another way to look at it is that one Bitcoin could buy you 34 ounces of gold. Now it can only buy you 31 ounces of gold. So as I said, don't tell Peter Schiff, not looking great for Bitcoin at this stage. But provided it holds these lows here and continues to find support, we could see some higher prices again. And Bitcoin versus silver, that's the same point there. The March 2024 top to the current price, it is now down nearly 10% against silver. So at the time, one Bitcoin could buy you 2,900 ounces of silver. Now it can only buy you 2,600, roughly 2,650 ounces of silver. And it's been putting in lower highs through this period. So something to keep in mind, especially if you are looking to invest in the markets long term. You're not just looking for the next altcoin, but you've got a nice sizable position of a portfolio that you need to protect over these coming years, especially with the 18-year cycle looking like it's playing out. TIA Premium, place to go to learn more about navigating the cycles with multiple assets. I'll see you guys at the next video. Like and subscribe. Until then, take care. Peace out.